All right, welcome everyone. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. If you would please go ahead and type the number one in the chat box, let me know that you can. I would greatly appreciate it. Morning, Helen. How are you? Hey, Andres. All right. Thank you so much. As we get started, keep in mind that everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something that you like, anything, make sure it fits your own personal risk profile and risk tolerance. All right. No, sorry, I got a ton of things going on here at once. I'm trying to get started, so just bear with me, guys, as we get going here. Our agenda for today, we're going to go through our follow us page and we'll look at today's trades. We'll talk about economic reports, market review. We'll look at upcoming trainings, weekly training topic, and then your stocks in review. Basically, that is any stocks that you have that you'd like me to take a look at before we kind of wrap our day up. It'll give you one last shot for someone to give you a second opinion, me, on what I see on the chart. If you tell me a little bit more than just saying Apple, you say why you want me to look at Apple, I'm bullish, I'm bearish, I want to do a spread, whatever it is, I may be able to give you a better answer than just if you just give me a symbol. So here's our follow us page. Everything on here, you can find us on the social platforms with the exception of the trading post. That is our newsletter. That is a free subscription, but a subscription only. You need to subscribe to. We do not automatically add you to that list. You need to subscribe yourself to that. If you are interested, Andrew, can you drop that link in there, please, for that? Once he does, you can just click on that and you can go right there. And I'm still sharing I'm not sharing my screen. Well, that's not good. All right, there we go. Sorry about that. Um, right here, trading post. That's when Andrew drops the link in. Everything else, you can go right to the social media platform, and you can find all of that there. We put stuff up every day on just about every one of the platforms out there. So, all right. Today's trade. So, what trades did y'all do today? Drop those in. Let's see what you've got today. I literally made it back to my office 10 minutes ago from an appointment this morning, so I did not get a chance to do much with the market. And for some of you, you know that I was out last week, a couple of days on vacay as well. We were down in Savannah, Georgia for a wedding. It was beautiful. The weather was amazing. That's for sure. We had a great time while we were down there. So I got no trades off today. Let me go ahead and bring this in. And from last week, I did my last update on Wednesday, so this was through Wednesday's close. We had AMD, great trade. We got in at 223.10. We got out at 230.50. That was a $5,700 move. If you only did one contract, let me just grab this different spreadsheet. Oh, there we go. It opened, didn't even realize it. $577.20 on just the one contract for AMD. Here, let me put it down here like this. All right. So Amazon, we got in at we got in at 216.20. We got out 213.60. So $1.40 move on the stock price. Nothing great. It worked. Don't get me wrong. I'm not complaining about it at all. $811. It was $200. It's a four contract trade. We took it aggressive. It was a bearish setup in a bullish market. Netflix, we did extremely well on Netflix on one of them. The other one we gave some back. So on the 14th, we got in at 1206.50. We got out at 1215.30. So we're up $2,745 also on four contracts, since that is an aggressive trade. And then the next day, the 15th, we got in at 1206.50, same setup, and we got out at 1203.30. So we gave back about $1,000 on that one. On our one contract trades for the end of last week, we're up $1,217 there for Tuesday and Wednesday, and we're up $8,330 on our full contract trades in POP. So Um, Tripp said morning scalps on the Qs for about 35.7% in 6 minutes. NVIDIA 9.8% in 3 minutes. IWM about 23.8% in 7 minutes. Um, Tripp said the trades may be off a little bit, but on the Qs, well, oh, that's a lot of it. On the Qs, it was 70% on the Qs. So good job there, Tripp. Not a lot of other trades coming in here, guys. I did not get anything from Brenda today. I'm not seeing her here, so she may not be trading today. Um, but overall, if we go and look as a market, let me open up my quote board. So, guys, if you're using the real-time data on Omega charts, if you open up the quote board, which is under view, right? Go to quote board, and then you set it to the file, to the folder that you want. That folder will automatically, it will update everything for you. You can see under this change column, and it'll have everything there. But when you go to the chart, it's already activated, it's updated. So it's the fastest way to get it there is to do that. So right now we're up 65 points on the S&P, which is great. We did exactly what I want. Now we just need that pullback. We'll talk about it in a little bit. VIX is down here, right? So a good move to the downside. Adobe was in a bearish bias. We got a bullish bounce on it today. Nothing I'm really concerned with. AMD gapped away. Nothing there. Big moves like this today, on the S&P as an example, we got the gap up. That big move makes it difficult at times to try to find a good setup. Bearish setup. Coinbase, we were bearish. Now we're bullish. I'm not going to do anything with it today. So not a lot here as far as setups today. Yeah, Patty, you're not kidding. Tripp slamming it for sure. Goldman Sachs, and that's all in our inner circles trading room, guys, is where they do these trades. Nothing on Lilly. Bearish, but nothing I'd want to do today. Nice move up, finally out of this stagnation that we had there off of that 718 level, but nothing crazy. Netflix. Netflix was a good move, but it gapped up and it never pulled back. I was looking at a chart of it while I was out. I see it gapped up. It got a little pullback. What was our low here on this 5 minute? Well, let's go look at a one. You'll see it better on the one. So we gapped up. We had the pullback here. So we had a fib line of 1205 and a half, we'll call it. And we closed at 1207.76. Too far away. I needed closer. Never got there. Good move. If you took the trade, good for you. Wasn't one that I would normally do because of the way it's set up. Oracle just gapped away. SPY would be a good trade potentially tomorrow if we can get that pullback. And then Tesla. So all of my key stocks, they all gapped somewhere, right? But most of them are not in positions to take the trades. So actually, I didn't say anything that I would have liked anyway for today. So I'm not disappointed that my appointment was today. That worked out okay. All right. Oh, let me get the camera on. I think we got it set up and going here now. And for those of you that are watching along with us on the hub or on YouTube, make sure if you have questions, you go ahead and drop them in the chat box, and Andrew will get those off to me. There we go. Perfect. All right, I think. It's as perfect as I can. How about that? All right, so let's go back into our training document for today. Let's go look at economic reports. Guys, it's just sad news or bad news all across. With the economic reports, we don't have any, right? The first thing you see before you even open it up, U.S. government data may be impacted by the shutdown. Tentative events are subject to delay, revision, or cancellation. So if we open this up, I just can't trust that we're actually going to see it happen or not at these times, guys, with the shutdown, period. So I will say, traveling this week, I've saw a lot of horror stories on different airports within the last 2 weeks or so. I've been paying attention to it because of our trip coming up that we had for our family wedding we were going to. And TSA had been a disaster. One person had said that they had shut TSA pre down one day. They just didn't have enough people coming to work. We were fine in both JFK and Savannah, Georgia. We had no problems in either one of the TSA lines. Actually, the regular TSA line was shorter than the TSA pre line. So go figure. But we were able to get through pretty good. So at least we've got some, that part of the government functioning okay. There was that near miss at LaGuardia, I think, where the two planes kind of diverted. Um, but Monday, Tuesday, Wednesday, we got nothing, honey. Right? Thursday, we've got, it says 10 a.m. existing home sales. We can rank it since it's giving us dates and times. But we've seen a lot of these just not coming out when they're supposed to. Just not making it. Let me grab my drawing tools. I don't have them open. 3, 2, 1. Da, da, da. Okay, there we go. So when I look at existing home sales, yeah, I don't care. 10 o'clock, which means it's not important to me. It's orange, which means it's not important to me. I'd give it a 3. Right? Is it during the market open? Yeah, so maybe you want to give it a 2. The market is open, but I'm not overly excited about it being something that is going to really move the market. These right here are 8:30 reports. Unless you're trading futures, they're not going to matter. Meaning if you're trading before the market opens, you're in the market, like Jeff and some others there. Then you've got Friday, 9:45 a.m. There you go. Winner, winner, chicken dinner. It is, while the market's open, they are both red. They're both PMI. It doesn't matter. They're different things. Manufacturing service. It's coming out of the same report. This is going to get a 1, right? Most important of all, why is it 1? Because the market is open. We're red. It would be a 1. Here we've got market's open. It's orange. We give it a 2. If the market was closed, if this was an orange report and the market was closed, we would get a 3, right? If this was an 8:30 a.m. report and it's orange, you would get a 3 for that in there, right? So, but just keep your eyes open when it comes to these economic reports. You may be looking for that report to come out at 9:30 or at 9:45 or at 10 o'clock, and that report may not come out until 10, 11, 12, 1 o'clock, if it even comes out at all. So there is a little bit of a drag because of that with the market. So you want to have a little bit of caution when it comes to that. Yeah, Andre said flew to Dayton through Charlotte. Good TSA both ways. Good. Yeah. Yeah. One of my daughters had traveled a week before and they had troubles on one flight where TSA pre, they only had 2 people working it or something. So they had it open, but it was very slow, very, very difficult to get through. But she made it. It was faster than where the regular line was that day at JFK for her. So but nothing really crazy coming out here. Right? Certainly want to be cognizant of the 29th, Fed funds rate, FOMC, conference at 2:30. This is, are we going to drop rates again or not? So do this. If you think the rates are going to drop another quarter point, give me a 1. If you think they're going to hold, in the chat box, give me a 2. So do you think rates are going to stay the same or do you think they're going to drop down? Give me a 1 if you think they're going to drop. Give me a 2 if you think they're going to hold. That is an L, not a Hoyd. Okay. We have both opinions out there. We seem to have more 1s than 2s. Look, don't worry if you're wrong. It's just an opinion. That's all it is. Yeah, there you go. Tripp said 98.9% on CME's FedWatch that we are going to see a drop. That is 1 quarter, Tripp, correct? We're not talking half or whole or never be whole, but it's 1 quarter, correct? Yeah, 25 basis points. So there's a 98.9% chance we're going to see a drop on that day. So guess what? It's built into the market already. It's built in. It's built in. If we get a drop, it's what was expected to happen. Not a big deal. Okay, hey, we got a drop. you're not going to see that big drive in the market from the drop. You're not going to. From what Powell says around the cut, that's where you're going to see the potential issue. Is what other words he has to say. Now at the Fed funds rate, it's just that. Here it is as a rate. His statement is just a bold statement of what they why and how they came up with that opinion of leaving it, dropping it, raising it, whatever it comes out to be, each and every time they do it. And then the questions come at the press conference at 2:30. That's where people can ask things differently than the way the Fed chose to address it in their statement. Reporters, right, can ask things differently than the Fed addressed it in their statement, and that's where we could see shifty some shifty things happening, some shifts in the market taking place as um, as the market starts to move around the way that he answers those questions. Many of the Fed members have come out and stated that they believe we're going to have two more cuts this year, which means October and December. Right or wrong, good or bad, I don't know. We'll see what they say this time around. I think we need it. I still believe we need it. I'm still of the opinion that we need that other drop, that other cut, another quarter after this one. From there, I'm not sure. I don't know if we really need more than that or not yet. Would it be nice to get down to lower interest rates, to get under 6, to get to 5.5? It'd be nice. I just don't know if we need it. And you get into the inflation worries of driving costs up and so forth, that because supply and demand goes up, and just putting us on a whole different path, which is very cyclical. It's very standard on how it happens, right? So next week, we'll talk about it, of course, on Monday, but next week we've got to be knowledgeable that this is coming out. This will happen no matter what. The Fed's going to announce. There's not going to be a delay in it. I don't believe it all. It'll happen for them. So Tripp said more than 2 will be bad for inflation, but could be good for jobs, between a rock and a hard place. And I give Powell some grace with that, Tripp, right? That he is navigating in waters that we've not seen before, right? We've not had an economic environment like this before, that even with as high as the costs had been, we still saw a thriving market take place. So now that doesn't mean I like him, because I don't. I do not like him. I would like him to be gone. I do think that there would be I think we should have cut rates earlier, and I think playing catch up never works. The problem is with Fed, they've got to look at the last 2 or 3 statements of these reports to say, oh yes, we're now in a recession, so it's time to start cutting. But it's already happened, 3, 4, 5 months ago, and now we're reacting to it. So we definitely are. We talk about leading indicators in the market. The Fed is not a leading indicator. It's the most lagging indicator there absolutely is. No history, no framework, no economic models, nada, right? Nada in Russian, Tripp, it's nada frickin' dingsky, right? Nada frickin' dingsky. We got nothing. We have absolutely zero to work with right here. So it's by the seat of his pants. Good or bad, I don't know, right? Powell has done a good job in the past, but the economy was good. So was it Powell, or was it just right place, right time, right? Yeah, I don't know. I don't know, but we'll keep our eye on it. But we do have almost a 99% chance we're going to get a quarter point drop this month, so next week, Wednesday, right? Yeah, next Wednesday. Okay, let's go back into the presentation. Let's go take a look at the market. All right, S&P 500, guys. So a couple of critical things to keep your eyes on. I'm going to bring this as big as I can on the screen, especially those of you that are following along on mobile devices. I know it gets a little tougher. So we had made the move up to the all-time high. We got pretty close here. Good big pull down on the tariffs concern. China, 100% tariff, la da 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 da. Right, and you can see what that's done. Nothing. We're right back to where we were basically on the close of this day before the big drop. So we're right back in there. This drop down though did bring a lower low. That right there was, or could be potentially concerning, right? That it happened. We put in a new low, and now the next question is, we're not out of the woods yet. Oh, but we're back into bullish, Rob. Doesn't matter. I can't draw it on here. You see the way I've got the blue lines drawn here for the swing low, and here swing low, and here's a swing high, and right. You can't really see it well, but there's a swing high here, right? Well, I don't have one drawn here. It's over the black line. You'd never see it at all. Okay. I don't have it at all there. But that high has to be violated. We have to break that high. It's a must, even by a penny. If we fail without breaking through that all-time high, which was not the black line, we missed it by a little bit. The high there was 67, 64, 58. This is 67, 65. 67, 64, 58 was the all-time high, right? Right there. So we need to be above that. Period. The end. There's nothing else we could do. We've got to be above that level, above that price point. If we fail, we now have a higher low, a lower low and a lower high, which all along we had higher low, higher high, higher low. What does that mean? This low, and then the next one was this low. This low is higher, right? We had a high, and then we had another high. This one is higher than the previous one was, right? Well, if we put in a lower low, or we put in a low, and then we put in a lower high, right? If that was our high, and now we have a lower high, and then we put another lower low, you see what's happening here. We now start to have that trend down taking place. Okay. And that's what we want to avoid. So until we break what's going on up here through that black line, that 67, 65 level, and I don't need to close above there. I just need to get a high above there. That's all I'm interested in. If that's the case, we've got some grace. We can take some downside pressure. We're okay. Right. But this gap up today showed some strength after 1, 2, 3, 4, 5 days of uncertainty that we, just went back and forth between neutral. Actually, we were in neutral here, still neutral, bullish, neutral, bullish. We're back again, but we were all over the place, right? All over the place. Moving averages that started to tighten up. So it made it extremely difficult to get any kind of great reading out of there because we went sideways for 5 days, right? As we started to do here, we just had, after this big move down, we got that correction and we just went flattened off in there completely. Yeah, Tripp said spent all week in the shadow of that huge candle. That's exactly it. If you look at it, right? If you look at the candle body here, it's a complete engulfing. I was going to say engulfment, but it's the same thing. Engulfing. It's a complete engulfing of all of these 5 candles. So absolutely, we need to break out though. We need that breakout to take place. So what are we looking at? Well, right now we got to move to the upside. And I know there are traders that are sitting here and they are kicking themselves that they didn't take a trade this morning, or the market moved up and I didn't jump on it. I should have jumped on it when it made the move up. I spent Thursday evening was a family because everybody traveled from New York. It's my cousin's kid who got married. All of her family is here. Her parents, uncles, aunts, us, my kids are their cousins, right? So it's my cousin's child, daughter got married. I spent an hour with the bride's father on Thursday night. It was here's some food, here's some beer, wine, whatever. Enjoy yourself. Just talk, have fun, right? Something to do since you traveled in Thursday for the wedding on Friday. And we spent an hour talking about markets, market conditions, what's going on, and so forth. John is probably one of the smartest people I've ever met in my life. He doesn't really trade the markets. He does invest in his own portfolio, but he doesn't trade markets. But we spent a lot of time talking about how markets move and the reaction and what people tend to do and how they tend to take a trade, right? And the average person just goes on a day like today, oh my God, I got to get in, it went up. And I'm not saying you might not be right. You may very well be right. You may find a strategy built inside of that. You may. But this breakout doesn't give me a lot of confidence yet because of the couple of things I've already said. We've got a lower low, and we have not broken the higher high. We have not broken that 67, 65, which is a major resistance level for fibs, right? Which lays right near, try that one more time. It lays right near this 618 from the ABC and the negative 272, which is a hesitation level for our fib. So we've got a very strong blue zone in there, right? And uh, this gentleman, John, the bride's father, he understands, he knows what Fibonacci are. He understands the levels. He's a math guy, he's an engineer type guy. So he understands it, no questions asked, right? We got into these levels here, which he had not thought of, not considered. And we talked about the 4181, the 6765. And I'm doing this visually, right? We're not, or audibly. I'm not looking at charts and showing it to him. We're talking it out, and he's getting it. He's following it along. And I said, we just recently ran up there with the all-time high. And he goes, yeah, I know where we got up to. I said, why did it stop there? He goes, that was my question. There's nothing there. What made it stop? We've never been there before. So, Rob, why does stocks stop there? And I started to explain this, what we call a super fib, right? And I started explaining that super fib to him. And it was a major aha moment, right? We talked about, breakouts without retracements, and it was a major aha moment for him. Now, will he do anything with it? Will he trade it? Will he do anything like that at all? I don't know. I can't say, right? None whatsoever. I can't say. But the conversation was to the point that I was able to show someone who was an investor that there are reasons stocks do what they do and things that we should want them to do before we make a decision to take the trade. If I'm sitting here today, I am back here in position number 3 in the chair saying, okay, I'm just going to watch, right? Because I love where we are right now. I absolutely love where we are. So what do? Well, I'm going to look at the SPY. I've said it a million times. There's not a person in here that should not be trading SPY and QQQ. Everybody should have them on their list. Everyone. So what are we looking at? The SPY gapped up, opened right at the fib line, at a zero line. So we've made the break out of the zero. You could see the all-time high that we had put in. I'm going to assume it's the same price level right there. Same candle. Oh, maybe not. Might have been the Friday was a little bit higher. Let's see. Our high here on last week on Thursday was 673.94. And the high was 673.95. So we're a penny higher here. Okay, so let's just delete it out of there. It's much easier than trying to drag it. Let's come off of there. Okay, so 673.95, right? That in essence becomes a resistance level right there. All right, because it is our all-time high. So what do I need to see happen for me to want to take a trade on this tomorrow? Right? I would love to see a pullback, which we'll see the moving averages climb up today a little bit more. Even with the market pulling back, we'll still see a continuation up tomorrow because of the overall movement. Especially with the movement on Friday and today, we'll get a higher climb on the 8. We pull back and we bounce off of the 667.34. So if I can get down to 668-ish, bounce, get up above 668 and a half, a quarter, 3/4, whatever you choose to be, that high, the all-time high that we put in 7 or 8 days ago, 673.95, that right there is what I'm looking at as resistance. Now my target would be $1 or $2 below there. So 674, probably 672, 673 is going to be my target. I get in at 668, 669. I've got $3, $4, $5 as potential in there as a move. Is it enough? I don't know. You have to decide that. Can it move that in a day? Can we move $5, $6 in a day on the SPY? There's a fibit of 15, which means it moves $7, $7.50 a day. So yeah, we could easily make that move, right? From 67 to 74. That's a $7 move in there. We could easily make that. And when I say easily make it, I don't mean that you're guaranteed you're going to see it every day, but it's a normal movement for it, is what I'm getting at. So I like that there. So give me that pullback, that bounce. That's what we're looking for overall. So the S&P 500, I love what it's done. I'd like to see it pull back. Well, Rob, what if it takes off? If we just take off and don't pull back, I'm going to sit back in position number 1 in the chair. I'm going to be very cautious, on trades. If I find a trade that does that, let's say the S&P keeps moving higher, does not pull back, and I get a stock that pulls back and bounces off of a key level, Fibonacci for me, support and resistance zones, whatever you're trading off of is fine, whatever you use. It pulls back and bounces. It could be Coinbase or it could be Amazon or whomever, Tesla, whoever else is on our list. If it does that, if I get that pattern, done. Right? There's my potential entry into the trade. But if I can get the pullback first on the S&P and the bounce, I will feel more confident about it. As we get up into the 67, 65, I'm going to start getting a little more cautious. Until we can break it, and I'd love to see the wick break through. And I do believe if we don't see any major Middle East news, Hamas, more attacks and wars back on, if you don't see that happen, if you don't see the tariffs in China going to 200%, I do think we could break the 67, 65. Do I think we're going to continue to run forever? No, I don't think we've got that much further to go, folks. I think with what's going on in the economy, with just inflationary fears and so forth, more layoffs coming in. It's funny how you're not really hearing about a lot of this, where Amazon laid off 15,000 workers from one division. They shut down. You're not really hearing a lot about this stuff, right? It's off. It's really not on the news the same way that you would think it would be, and it has been historically. But there's still a bunch of layoffs going on out there. So these other companies, or these big companies that are foreign-based companies that have decided to invest money in the U.S., even U.S. companies that have decided to invest money here, is awesome, right? I absolutely love that they've made a decision to invest in the U.S. They haven't done it yet. And it isn't something that we're going to see the fruits of that labor today. Right? What does it take? Years to build a new chip plant, right? To get it up and running to speed. Deborah said, I'm nibbling on BABA, maybe China stocks rebounding or just doing a bounce. Yeah, so it's possible, Deborah, but whether it's BABA, Baidu, or any of those companies, there we go, right? I mean, you still, when you look at it from a standpoint of where is it, I have not looked at that sucker in a long time. Let's go ahead and redraw the fibs on that baby. So I am way out left field on this one. Oh, what happened there? Actually, I'm going to draw it off of that one right there. That was a good pullback. Did we make it down? We did. We got back just about to the 236. I'm good there. 68 to 80. We move $7 a day, so we need a fib in there. So we need a negative 136. We need a 118. 6, 118. Okay. All right. So look where we are right there, right? So, I mean, good setup. Good setup, Deborah. I mean, if you took that off of that, 168 level, that's awesome. So did we get it? Let's go look at a 5-minute candle. Right? We broke out, we retested and bounced. Was it enough of a retest? You've got to make that decision. All right. We could go and dig further into it and look at 1-minute candles. So, okay, we've got a fib of 168.34. We closed right here at 168.37. Wait, what? Is that only 4 cents? Oh, yeah, 168.67, 34, 64 is only 20 cents. We did not have really much of a pullback in there. Again, doesn't mean you can't take it. It's just the way that I look at it, right? Did we get a pullback in it? Now, if I took this, Deborah, I would, when you said nibbling, that's exactly what I would do. I would take a 1-contract trade on this at most because I didn't get the pullback I wanted. But if I thought, hey, we're taking off on this one today, I like what the market's doing. I think China might be doing this, that, or the other, and I was going to dabble in it, I would do 1 contract only. Would I add to it later? Probably not. I probably would have gotten taken out over here on the micro day trading rules. Yep, Deborah said, yeah, just 1. There you go. There you go. Good. I love that you've got those rules in there, Deborah. That's fantastic. Really is fantastic. We're looking back at VIX, fear. I've said it before, I'll say it again. Oh no, we're on intraday chart, which I don't care about. We're on the lower end of moderate or medium of our green zone. I have less and less faith in VIX these days than I did, but it is still an indicator that we can gain some insights as to how volatile the market is. So something worth keeping an eye on, that's for sure. All right. Perfect. Let's go back into presentation mode. What do we got? All right. Inner Circle check-in is tonight, the 20th at 7 p.m. This Friday and Saturday, we'll be doing the quarterly training, which is 4 hours on Friday. It is 10 a.m. to 2 p.m. Same thing on Saturday, 10 a.m. to 2 p.m. On Zoom Room. If you're in Inner Circle, you'll get your invite automatically. Mastermind is tomorrow night at 8 p.m. Trading You is the 23rd. And Monster Market Movers is the 29th. Power option plays covered call E-mini are on regular schedule, as is Power Hour and Trading Coaches Playbook. And then, folks, we've got Futures Trading Simplified coming up with Brandon. He's got 5 classes on the docket for that. Andrew just dropped a link in there for that. So go ahead and get yourself registered for it. Rob, do I register for all of them? Just register for the one you want to go to. If you want to go to more than one, you can, but it's the same information, the same presentation. You might pick up something you didn't hear at a different, the first time you saw it, if you wanted to go to a second one, but it's the same presentation. I just want you to plan on getting to at least one, especially when Brandon thumbs this down, guys. It really, really drives it home. Save your seat. I love his jacket. I do. Weekly training topic. Right. So each week we set out to put a new topic out there. This is the topic from last week because we got cut off last week. So I want to apologize for that. We had storms on Monday here. A lot of rain Sunday into Monday. It was we dealt with almost an inch and a half, 2 inches, something like that between the 2 days. When I said there was something wacky happened on my computer, one of my programs had flickered and gone off. One program, but not the computer. And then we lost everything. All the power went. So I think we had a little brownout there for a millisecond, and then it just everything, the whole block, neighbors' houses, everybody was out. We were out for a couple of hours before we got it back, hour and a half or something like that, 2 hours before we got it back. So the training topic is government shutdowns, do's and don'ts, right? Did we dance? Do's and don'ts. Do's and don'ts. So I need to change my presentation. It's now do's and don'ts. Okay. Do's and don'ts. There you go. So government shutdown. We talked about it a little bit with the economic reports, and I'm going to bring the S&P chart back up, right? Can anybody do a quick search? I don't remember the date. I actually should put it on here. Can somebody tell me the date the government shutdown started? If anybody happens to know it, if not, I could do a quick search on Google. Maybe I should do a quick search on Perplexity. When was the government shutdown start date in 2025? 10/1. Thank you. Trip, much appreciated. All right, so let's go find that. No. That's 10/1. Okay. So government shutdown date. 10/1/25. Okay. We're going to change it to a blue. And let's just make it bold so it sticks out a little bit better. Let's make it black. They call the font style black. Doesn't matter the color. I'm going to put it down there. Okay. So you can see we had already come out of 1, 2, 3, 4 days rise, or 3-day rise, I guess. We gapped down and we took off from there, right? So 3-day rise prior to that, hitting an all-time high on the first. right? Now, from there, we vacillated. We hit another all-time high here. We hit a new all-time high here, another one here. And then the tariff news came out about China, and that's when we fell apart, right? That was the big drag on that date, right? That big black candle in there. Okay. So when we look at government shutdown, what do you need to know, right? What is it out there, or what is there for you to be focused on besides things like economic reports and so forth? Right now, I am doing everything in my power to take zero swing trades at all, because there is going to get to a point where people are going to stop going to work. You're going to have mail carriers that are going to not show up because they can't get paid, and they got the guys, gal, whoever is going to go work at their cousin's bakery or construction company or whatever else it is because they need some cash, right? So I get it. It's TSA, air traffic controllers. I get it, right? There's going to be some of that. There's going to be a point of kind of a weakening, a fault line that's going to drop off, right? And I don't want to be in a swing trade when that takes place, because volatilities right now are a little bit wider, a little bit higher because of this. And market maker doesn't want to be caught on the wrong side. So they're planning their trades, the market makers, around this government shutdown, and having a little bit more cost in there, maybe a little bit bigger spread, bid-ask spread, a little bit higher vol in there, much faster volatility flip in an option. So you have a stock that is going up, going up, going up, going up, and you get this all-time high, and you start pulling back, and you get down lower than yesterday's close. On this day, we saw volatilities just in the calls crash. So they sucked all the premium out of the volatility out of the call options, and they dumped it into the puts. So now you're stuck holding the bag, because it's not like they said, "Hey, hello, see me? Yo, market maker here. Yep, we're getting ready. You ready? We're going to drop soon. You should get rid of that. We're getting ready. All right, we're doing it now. You ready?" There's no warning. It's just, what happened? My option was trading at 6 by 640, and now why is it 5 by 580? What the hell just happened? Right? And the stock hasn't hardly moved. Right? It's the market maker adjusting vols on that position, right? On those options. So nothing else was driving it. It's just that. So how do we trade this, guys? Really, I want to see you shorten up your time frame. I want to see you shorten up or cut back on the number of contracts being traded as well. This is a period in time that, hear this loud, is going to happen again. It's going to happen again. And if you've not traded it, you don't know what to expect. This is your opportunity to go through and learn how to trade it. If you are fearful of trading this and have said, "You know what, I'm going to sit this on the sidelines," I applaud you. Awesome. 2 thumbs up with real money. You need to trade this every single day with paper money, with non-funded trades. Every single day. Because every loss is a lesson. Every trade that goes against you, you should be learning from that trade. What took place, what transpired, what happened, how can I become a better trader because of it? And you can't if you're not trading it. If you're watching it and say, "Oh yeah, no, I figured it out, I watched it." If you're not having some pain and suffering, even with non-funded trades, if you're not having some pain and suffering, you're not learning how to adjust, how to react. When I started in manufacturing, right? The process that I was on, I was starting to get all these calluses on my hand. I was on my right hand. It was whatever the function we were doing. A lot of hammering, I think it was at the time, with chisel and hammer. And it was a machine that we were rebuilding. And I got all these calluses, and I made a comment to this. He was an old Austrian, Gus Honigman. And I said, "Gus, I can't believe the calluses on my skin." He says, "Bob, your skin is not tough enough yet." He said, "You need to do more than make your skin tough." He said, "Then it won't happen ever again." And it doesn't. I don't get calluses. I could work for days with my hands and nothing happens, right? So he was dead right. You need to get calluses in the market. You need to build up that resistance to, this just happened, now what? There's a car coming at me speeding at 50 miles an hour. I'm standing in the middle of the street. What should I do? Let me think about it for a second. If you've had it happen to you before, you don't think, you just do, right? And hopefully, even if you haven't had it happen to you before, you just do, right? But you need to trade through this period. When earnings come, if you're normally a person that doesn't trade through earnings, stop funded trading and go to paper trading. You need to trade through that. These seasons of the market are normal. You can deal with 4 earnings seasons every year. You need to learn how to trade effectively through those, right? That's the critical part. But you've got to participate. Excuse me. You got to participate, right? Right now, you have to participate. I would get away from any low dollar stocks, any low volume stocks. That's my opinion. I'm not a fan of low dollar as it is, but I get away from any low dollar stocks, go to a little bit higher price position, get up above that $50 price point, $30 price point if you can. You know, if you're trying to trade 20-cent options on a $10 stock, I'm not saying you can't. I'm not saying it can't be done, but you got to look at the movement that's taking place, right? And I would definitely focus on the micro day trading aspect of getting in and out of trades without waiting for the end of the day or to hit your targets. So if we look at Netflix was one before, right? So if we look at a 5-minute chart on Netflix. No, it wasn't Netflix. Who was it? Okay. So in a nutshell, pretend you took this trade for whatever reason you took the trade. We're getting this move up. Once the move stops becoming active and you start to see that we're not getting that full movement up any longer, it's time to get out of the trade. I wouldn't hold on. So here, if you looked at a trade like this, let's say you took this trade, it broke down, it retested, it failed. You took the trade, it bounced. I'd be out of the trade on that bounce. But Rob, it went further. I get it. And I have accepted the fact that I will never, ever get into a trade at the lowest low and get out at the highest high. I won't. Okay, it won't again. It did happen one time, and it was by nothing other than sheer luck. It isn't something you plan for. All right, that's where the high is going to be, so I'll take it there. Right? It's all based on targets. That's all I do. It's all based on my targets. Right? I have 3 exits set up for every single trade. I've got my target, which would be somewhere to the next, if I was taking a bullish trade in here, my target would be somewhere at near resistance, right? Down below resistance, if I was taking a bullish trade, for argument's sake, right? I have an automatic exit in there that says 3:45 p.m. Eastern. If I'm not hitting my target, whatever the price is, get out of the trade. Just done. And then I've got the micro day trading aspect of it where I look at it and I manually manage that position. It's okay. I'm going to pull that trigger and get out of this trade. I've got enough profit locked in there. We're starting to get a pullback. And if you were lucky enough to get it, we haven't put them back out, guys. We just cannot find anybody with a good. I can't find it where it becomes a viable price where you guys are not getting crushed with costs. Where do we have it? Day trade. All right, clock. There we go. Let's see. No, that's the members area. Not probably what I'm looking for. Okay. Well, nothing's clicking there. That's fine. So if we go into the store, Andrew, we need to take a look on my account and see why the day trading clock is not opening up. Choose all tools. Let's see if we can get it from here. I don't know if you guys have seen this stuff with, some of the Amazon things being down, but there's all kinds of services that I use that I cannot get into today. A payroll service that I use, I can't get into today because of Amazon being down. We don't have we don't have that as a picture any longer here. All right. So anyway, if you're using the day trading clock, I've got one hanging up on the wall here. I've got 2 of them hanging in our office in Rockville Center, which is where our main office is. But the clock itself, I don't even have a photo of it. The clock itself has times of the day that are yellow and red, saying yellow caution, right? Usually a pullback period. Red, like lunchtime. You probably want to stay away from those times, right? They will give you some good guidance to that, to help you with that. I thought we made that available too online somewhere where you can download the screenshot of it in there. But I want to have the three exits available for me. So no matter what takes place, I've got a way of getting out of that trade. And I'm set. I have planned for every major contingency. Now, could the war in Russia and Ukraine become worse and cause the market to gap one way or another? Yes. Or even better. Maybe the war's over. Trump said it today. He's confident he'll get it resolved. But right now, all of a sudden, it's resolved and the market gaps up and I'm in a put. Right? I can't plan for that contingency. But if it goes against me, my stop's in place and I'm out of the trade. You've got to trade. You've got to trade smart. If you're a newer trader and this is when you're getting started, guys, you're on a major firing line right now. Major firing line right now. Right? If you're getting started now, you need to hold caution into the wind of not getting your head handed to you. Right? You're trying to learn options, pricing, and all of that at this time. Is it a bad time to learn? No. Would I like it to have been a better time? Yes. But what are you supposed to do? Wait until the market comes out and says, okay, it's a good time to learn. There is no good time. The good time to learn is now, today. That's the best time to learn is right now. Okay? All right. Last section in here is your stock review. What candidates do you want me to take a look at? Drop those candidates in, drop those stocks in, and I will do just that. I'm going to go and switch this over to a different list. What stocks would you like me to take a look at? All right, so we've got SPY in there. We looked at it kind of, but let's see. So guys, pull back to the 667.34 and a bounce. 674 is resistance. I'd have my target set at 673 on the upside for getting out of that trade. Right? Oops. All right. What else? That was the only one that I saw come through. So we looked at BABA. Those are good ones, Trip. AMD. Yep. Patty, Tripp's got that one on his list already too, so we'll take a look at NVIDIA. So AMD, we need to redraw. We need to redraw. We need a new fib. I missed it. Actually, not really. Well, maybe. I might have just missed it by a day or so. We had gotten the pullback already. This was our last update, and then I was gone. So 20 to 40 is 20 points. We don't need a fib in there. That's okay. What about on the top? 40 to 63 is 23. We don't need a fib up there either. So Trip said, love when our fibs match. There you go. Me too. So overall, I love where it's at. It broke out of its tops. If this is where it closes, awesome. Pull back to the 240 bounce, 263 resistance. So what would my game plan on AMD look like? I've got a resistance at 263.31. I've got a target of 262, 261 and a half, somewhere in there, whatever works best for you, right? I've got a 3:45 p.m. that if it doesn't hit that 262-ish level, whatever the target is, if it doesn't hit that, get me out of the trade. And then I've got a micro day trading and a micro day trading exit as well. Andrew, do me a favor, drop the link in for that. If you already haven't, you may have. Guys, if you haven't taken the micro day trading class, it's fairly inexpensive training. I go through the exact process of how we do this, what setups we're looking for, and so forth. That says, all right, this is it. It's time to pull the trigger and get out. All right. So I love the AMD. You know what? Let me do this. Let me write down new fib. New fib. And power out. All right. This way, when I go and do pop tonight, I remember that I just drew this in there today. NVIDIA, all right, probably need to revisit this one too, but we're not going to do it now. I'll do that tonight. Well, it's actually not in, that's why it's not in our, it's not in pop any longer. So we had a great move in there. This pullback, good strong move, good strong move, good pull back there. Let's pull this back. Ah, I was wondering why that I had that up there was Fibbits. Fibbits of Fibbits. Yucky. Okay. So we had this fib and this pullback, good move. We had a nice pullback in here, another good one in here, another one. So the problem is this stair step. I just don't have an ideal spot to draw from, right? So I'm going, if I can, I'm not just going to pick a random one. They all look like about the same. We had a decent move in here. So decent. That was really not much. That was decent. That was decent. And then we kind of rolled over from it. So we're going to go with the beginning of this run from here up to this swing high before the pullback. And there we go. So 83 to 94 is 11. We got 11. We don't need a fib in there. So we do not need a negative 136. So give me the small move up, the retest to 183, the bounce, 194.53 is resistance, 193, 3.5 is going to be my target. And then Andres was asking for Qs. It's such a big move. All right, so on the Qs, oh, did we get it? No. All right, we didn't get up there yet. But much better move than we saw on the S&P right now. So that 613.18 is the all-time high. That all-time high came on that Fed day, on that announcement day of what's going on with the China and the tariffs came out on that day, on that Friday, which was on the 10th. So at this point, Andres, either A, it pulls back to the 603 level, or breaks the 614 retest and bounces. Problem is the 382 is a little close. So I'm going to be very cautious there. I would probably not trade much in there. I'd be looking more at the break of the 619 half to the 629 half move, right? All right, I think I got all the candidates in there, folks. So I hope it was a good training for you. You guys are a little bit quiet today. Not a whole lot of questions in there. So hopefully I answered what you had that you did not, send over my way. But with that, everybody have a great rest of your day. We're going to leave the room open a couple of minutes. You can grab the links that Andrew just dropped in, the one for Brandon's class, the micro day trading, whatever it was, go ahead and check that stuff out. And with that, have a great rest of your day, and I will see you all at our next update. Take care, everybody. I will see you soon. Bye.